How Brexit could impact the UK property market. Article 50 triggered on the 29th of March 2017, the very moment Brexit became real, and the European Union was officially notified that the UK would leave the EU. So where did we go from there? What were the predictions for the UK property market? We're seeing shorts of stability injected into the UK market at every juncture of the Brexit timeline. This is very much about encouraging people to get on with their life and live. We're seeing increased confidence, and this in turn is turning the market into a seller's dream, with higher prices being demanded. The residential property market is already breathing a sigh of relief at the sound of Article 50 being triggered. The government has finally provided certainty and the absolute confirmation that leaving the EU is full and final. Much of the global property markets are supported by confidence. And of course, this is no difference here in the UK property market. House sales were down a good 20% from February 2016 to February 2017. And this was mostly about buyers and sellers holding on until they know what was what. While we are seeing an increase in inflation, the Bank of England is reluctant to increase interest rates. This is ultimately about preserving affordability and leads us to conclude that we are in a low turnover market with little pressure being exerted on prices. While the expectation before the referendum was that house prices would collapse, it has since proven to be way off the mark. We're seeing house prices increase in all regions of the UK, even in London, which is the single region expected to feel the full force of Brexit. A lot of this will come from the negotiations which take place as the UK is expected to thrash out with the EU over the next couple of years. Even with or without a membership of the European Union, we have a small matter of demand. The UK is suffering a chronic shortage of housing stock, along with an overwhelming level of supply demand. Even with uncertainties, the demand is still going to remain. And given the ratio in which house prices have increased relative to earnings in London for the past decade, caution is greater in London than elsewhere. Buying a property in London is a bigger financial commitment in comparison to the rest of the country. Therefore, Londoners have more to worry about than others. While some buyers will sit on their laurels and wait to see changes take place before their next move, overseas buyers are making their moves already with the weakened pound and a 10 to 20% discount this is providing. While the UK domestic market has already felt some of the effects of Brexit, we're seeing the reverse effect from the international buyers. The pound is weakened, and therefore buyers from overseas are piling into prime central London property. Though we are seeing asking prices increase, reflecting the increases in stamp duty. To find out more about investing in the United Kingdom, visit our website. It's www.fjpinvestment.co.uk.